Right now, while you're listening to this, a community bank in Ohio just lost another 2.3 million customer to a Fintech startup. Not because of rates, not because of service, but because their 1987 core banking system took 4 days to process what should have been a 2-minute transaction. This isn't an isolated incident. It's happening 847 times per day across American banking. And the math is terrifying. I'm speaking to you from Advanedge Consulting here in Dallas, where we've spent the last 18 months analyzing a crisis that most bank executives still don't see coming. The gap between traditional banking infrastructure and digital-first competitors isn't just widening. It's becoming a chasm that's swallowing market share, customer loyalty, and profit margins at an unprecedented rate. Here's what keeps me up at night. Every week, we analyze banking performance data across hundreds of institutions. The pattern is clear and devastating. Banks running legacy core systems are hemorrhaging an average of $500,000 per month in what we call invisible operational costs. These aren't line items on your P&L. They're hidden in customer acquisition costs that have tripled, processing delays that drive customers away, and compliance expenses that grow exponentially with outdated infrastructure. But the real killer: most banking executives have no idea this is happening because legacy systems mask their own inefficiencies so well. Last month, we worked with a $8 billion asset institution that discovered something shocking. Their legacy core banking system was processing the same customer data through 17 different modules to complete a simple account opening. 17 touch points, each creating delay, each introducing error potential, each costing money. The customer experience? What should take 90 seconds was taking 4 business days. Meanwhile, their primary fintech competitor was onboarding customers in under 3 minutes with full KYC compliance. This institution was losing $43,000 per month just in abandoned account openings. Customers would start the process, get frustrated with the delays, and move to faster alternatives. The bank never even knew these prospects existed because the legacy system couldn't track incomplete applications effectively. Here's where it gets worse. We've analyzed operational costs across 127 institutions over the past year. Banks running legacy core systems spend an average of 34% more on compliance alone compared to institutions that have modernized. Why? Because old systems require manual processes, custom reporting, and constant patches to meet evolving regulatory requirements. Every regulation change becomes a 6-figure IT project instead of a software update. One regional bank we helped calculated that their legacy system was costing them $2 million annually just in developer time for regulatory updates. Their compliance team was spending 40 hours per week manually generating reports that modern systems produce automatically. That's a full-time employee just creating reports that should be push-button simple. But the competitive disadvantage goes deeper than operational costs. Legacy systems create what we call innovation paralysis. When your core infrastructure can't support modern integrations, you can't respond to market opportunities. While fintech companies launch new products in weeks, traditional banks with legacy systems need months or years for the same innovations. The market has shifted, and the cost of staying behind is accelerating. Customers now expect real-time payments, instant loan decisions, and seamless digital experiences. Legacy systems simply cannot deliver these capabilities without massive workarounds that introduce more cost and complexity. This is where understanding modern fintech infrastructure becomes critical for your institution's survival. The technology reshaping finance isn't just about keeping up with trends. It's about fundamental operational efficiency and competitive positioning. AI-driven banking operations are eliminating the processing bottlenecks that plague legacy systems. Modern core banking platforms use artificial intelligence to automate decision-making processes that previously required human intervention. We're seeing institutions reduce account opening times from days to minutes, while improving fraud detection accuracy by 340%. Blockchain technology is revolutionizing transaction processing and settlement. Banks implementing blockchain-based payment rails are processing transactions 67% faster while reducing operational costs by up to 30%. This isn't future technology. It's happening now, and institutions without access to these capabilities are operating at a severe disadvantage. Digital payments infrastructure has become table stakes. Real-time payment capabilities, mobile wallet integrations, and instant person-to-person transfers are no longer competitive advantages. They're minimum customer expectations. Legacy systems simply cannot support these features without expensive middleware solutions that create more complexity and failure points. When we examine core banking modernization, we're looking at the big three providers serving over 70% of U.S. banks. Fiserv, Jack Henry, and FIS have all invested heavily in cloud-native platforms that deliver the processing power and integration capabilities modern banking requires. These modern core systems reduce operational costs while dramatically expanding product development capabilities. The transformation patterns we've observed are consistent across institution sizes. Banks that modernize their core infrastructure typically see 25 to 40% reduction in operational costs within 18 months. More importantly, they regain the ability to innovate and respond to market changes rapidly. For lending operations specifically, modern loan origination systems like Abrigo are transforming how institutions approach credit decisions. Abrigo's platform accelerates lending workflows, enabling faster loan approvals while maintaining rigorous risk management standards. We've seen institutions using Abrigo reduce loan processing time by 60% while improving decision accuracy, helping them compete effectively in modern credit markets where speed and precision determine success. The integration capabilities of modern systems create competitive advantages that legacy infrastructure simply cannot match. APIs enable real-time data sharing between systems. Automated workflows eliminate manual processes, and cloud-based scaling adjusts capacity based on demand. So what does implementation actually look like? At Advanedge, we help institutions navigate this transformation systematically, starting with comprehensive infrastructure assessment. We analyze your current core banking platform, identify integration pain points, and map out modernization strategies that minimize disruption while maximizing competitive advantage. Digital payments integration is often our first priority because it delivers immediate customer experience improvements while generating measurable ROI. We help institutions implement real-time payment capabilities, mobile banking enhancements, and API-driven fintech partnerships that expand service offerings without increasing operational complexity. System integration strategy is crucial because most banks need to maintain certain legacy components during transition periods. We design integration architectures that allow modern and legacy systems to coexist while gradually migrating operations to more efficient platforms. Regulatory navigation throughout modernization ensures compliance requirements are met without slowing progress. Our team helps institutions work with regulators to demonstrate how modern systems actually improve compliance capabilities and risk management effectiveness. The key is approaching modernization as a competitive strategy, not just a technology upgrade. Every month of delay allows fintech competitors to capture more market share and customer mindshare that becomes increasingly difficult to recover. The future belongs to financial institutions that recognize infrastructure as competitive advantage. Banks that continue operating on legacy systems will find themselves unable to compete on speed, cost, or customer experience. The institutions thriving 5 years from now will be those that act decisively today to modernize their operational foundation. This isn't about keeping up with technology trends. It's about survival in a market where customer expectations and competitive dynamics have fundamentally shifted. The math is simple. Modernize now or lose market position permanently. The cost of waiting is higher than you think. The next video proves it.